Welcome to the new member Quick Start video for Zacks Value Investor Service. It's in this video that you're going to learn everything you need to know about getting into this trading service. And here to tell it to you and explain what the service is all about, the mission of the service, strategies, and all that kind of stuff, is Tracy Reinick. Tracy's the editor of the service, and she's also going to manage this portfolio. Now, Tracy, you are certainly no stranger to value stocks because you've been our value stock strategist here at Zacks.com for about 5 years now. And then you ran previously the Zacks Value Trader trading service, which was the precursor to the Value Investor. But for those who are new to value investing, let's start from the beginning. What's the mission of Value Investor?
Well, obviously, we're buying value stocks, but anybody can do that. You can set up a screen, find things with low Ps, and just say these are value stocks and go buy them. So, why would you need me or the service?
Right.
But we're really going to, take a little bit different tactic and go beyond just the normal value fundamentals. And obviously, we're going to be combining it with the Zacks rank. That's going to be key because that goes towards, earnings growth. And so we're going to be combining both the value fundamentals, including the PE, but also, price to book, price to sales, and those common fundamentals with the Zacks rank. So, we're looking to have about 25 to 30 stocks in the portfolio using these fundamentals. And then we also have a longer holding period than what some people might be used to.
Okay.
It's not a day trading service. We're looking for, 6 months, a year, maybe longer, depending on what's going on with the stocks. So we're not going to be in and out of positions, every couple weeks. It's going to be a lot longer holding period. And so for that reason, everybody's going to have a little bit of patience. Value stocks have traditionally been value stocks because the rest of the market is ignoring whatever's going on with that company.
Right.
There's something they don't like, or there's something old in the story they think is still going on, and so it's not getting any love from the market. So when we buy it, we're going to have patience until everybody else recognizes what we recognize, that it has these good fundamentals, and then it has the good, earnings picture, and then, hopefully the stock will take off. But that doesn't mean right when we get in, we're going to see, a big jump in the stock. So people just really are going to have patience with the value kind of investing.
So for those just joining the service, probably, at least from what I can recall, one of the most commonly asked questions is how do they get started? So let's tackle that first.
Right. I know it can be a little overwhelming. They join the service and then they go in and they see this portfolio with a whole bunch of stocks and they're like, what do I do? Do I buy all of these? Do I only buy some of them? Which ones do I buy? So the main key thing is to, first of all, buy all the number ones and number twos, Zacks ranks. You can find that on our site. And those, because they're ones and twos, buy off the bat. But because if a stock's in the portfolio, that means I like it for some reason. Because if I don't like it, it's going out of there. So I do encourage everyone to buy everything else in the portfolio that's at least a 3 and better as well.
Okay.
If they have a smaller portfolio and they can't buy the 20 positions because they just don't have enough money to do so, or they want, something smaller, then just buy the ones and twos. But, if it's a 3 or more, go for it. If it's in the portfolio, go for it. Now, we may occasionally have a 4 in the portfolio, which is why I'm not just saying buy the whole thing. And I would stay out of those if you're new and there's something in there that's a 4 right when they join. But everything else, the 3s and higher, join those or buy those and, kind of get in tune with what the rest of the portfolio is doing.
All right, that helps everybody on the buy side. What about those who want to be on the sell side?
Well, there's going to be 3 main reasons we would sell a stock. And the first one is if it does what it's supposed to do. And that is, we buy it cheap and it has a good run and it's fully valued. Where there's not as much upside or maybe the earnings growth is slowing, we'll sell those. The second reason might be because something has changed with the fundamentals of the company. Maybe they've fired all of their management, or they're in a sector or an industry that has really, taken a turn for the worst, and there's, going to be, again, very little earnings growth. Then we'll get out of that. The third reason might be that it's gone to a Zacks number 5. Like I just mentioned with the 4s, We may stay in some 4s, which is a Zacks rank sell, because some industries just kind of tend to go down to a 4 sometimes in between earnings season. Doesn't necessarily mean for our longer term holding period we need to get out, because the Zacks rank is the short term 3-month projection. So if we have a little longer time horizon, then the 4s, depending, it'll be a case-by-case basis, we may stay in some of those. But if it goes to a 5, something's going on there. The earnings are being cut pretty severely if it goes to a number 5, so we will sell if it's a number 5. Now, I know I've heard from a lot of customers over the time about some of our really big positions, like where we have big profit of 50, 60, 70% in a position, and people start to get a little nervous. Tracy, when are we taking our profit in this?
That's a logical question.
Yeah, legitimate question. And I tell people in those situations, if it's staying in the portfolio, that's because the fundamentals are still good and it's still has some more upside potential. But there's nothing wrong with locking in profits ever. Obviously, that's the name of the game. So I tell people, you might want to take off half of your position, because the portfolio isn't really designed to do that. So there's nothing wrong with selling half your position or a third of it and then letting the rest run along with the portfolio. So that's just a little bit of tidbit when we do get those big winners in there.
Right. And I have to, unfortunately, cover the possibility of bear market.
Yes.
Those come up from time to time.
They do.
So do you have a strategy in mind for any eventuality of a bear market?
Well, as you said, they do happen. I mean, we can't say that they're not going to. So we might as well be prepared. One of the key things is that we may sell some of the positions that could be a little more volatile, and those could be small caps with really low volume, because those tend to get whipped around, or cyclical stocks that have run their cycle and they're about to be sold off because it's change in the cycle. So we might exit some of those positions, and we'll probably be in a little bit more cash at that point. And then we may add some stocks that are more on the conservative side. Those would be the larger caps, dividend payers, something that would be a little less volatile, just to be have something in the portfolio, depending on the bear market, for when the upside returns. The third thing we might do is buy the short ETFs, which have been used in the portfolio before. And these are the ETFs that track the indexes, the various ones. You can buy them for the Dow, the S&P 500, the small caps, mid caps, and they do the opposite of whatever that market is doing. So if you do the short, single short, and the S&P goes up 2%, that one will, or if it goes down 2%, it goes up 2%. So it's a way to get in on the opposite side, and you can do pretty well with those in a bear market if you time it.
Yeah, a little bit of a backstop there.
Yes, so that would be, those are used as kind of a hedge on some bad times coming. And I do get a lot of questions on whether or not we're going to short individual positions. Say, for instance, you would be shorting like energy stocks if crude was, doing something crazy. And I just feel like I'd rather use the short ETFs, and so we're not going to be shorting individual positions in the portfolio. We'll either be in cash, more conservative holdings, or the short ETFs if a bear comes. And I do want to say, bear markets always happen. We have pullbacks, and it wouldn't even be a bear market, of 3 to 5% and things like that. Yeah. But for value investors, it creates a real great buying opportunity. As much as there's pain for when it happens, it opens up a lot of different stocks that we can now get into because their valuations come back down to earth. So, you have to kind of look at the bear markets as good and bad, but for value investors, you have to look at it as a good buying opportunity. So hopefully, we'll get some of those for good and bad. But, it's not all a bad thing for value investors.
And hopefully there's more good than bad.
That's right.
Going forward. Well, there's a lot of good information there that Tracy gave you, not to mention that she keeps you updated on the portfolio and on what's going on in the market and what she thinks is going to be happening with the market in daily commentary that you will be sending right to your inbox if you are a subscriber to this service. And she comes down here every couple of months, and we do a video at the old Video Ranch where we talk about the portfolio and what's going on, conditions affecting the portfolio. But if that's not even enough, if you have a specific question that you want to get to Tracy, valueinvestor@zacks.com. That's the place that you email it to. She welcomes all the emails. She answers as much of it as she can. and she will address it maybe in a commentary, maybe in a video, maybe directly with another email response. With Tracy, I'm Terry Ruffalo.